Tech giants gearing up to report quarterly results this week, with investors closely watching the price tag for the AI build-out. On Wednesday, we're going to hear from Meta and Microsoft, and next week, Amazon and Alphabet are on deck. In all, the four companies are expected to spend over $400 billion in capital expenditures this year. That's according to estimates compiled by FactSet. And here to decode the AI messaging for this earnings season, we've got Ali Mogharabi, WestEnd Capital Management Senior Equity Analyst. Ali, always good to see you. So let's start at kind of like big picture first, Ali. One big theme for tech investors, it'll be, of course, this AI CapEx spend. And I was messaging with my buddy Doug Clinton today, very smart tech investor and analyst like yourself, Ali. And he was saying, if you look at the Mag 5, Doug said, so he's taken out Tesla and NVIDIA, they're expected to grow CapEx by about, Doug says, 34% in 2026 year over year. Doug is betting, he tells me, no, he thinks it's going to be stronger. He thinks it's going to be more like 50%. So the pace of acceleration is just insane, Doug says. He's never seen anything like it in his career. What do you think, Ali? This AI CapEx boom, does it continue? Could it be even stronger than forecast, Ali?
Yes, we do think it could be stronger than forecast. However, as it accelerates, it also brings with it a lot of other risks. So, as you grow faster, you grow that CapEx faster. I think the investment community is going to demand ROIs on that CapEx, earlier or sooner or more quickly. And there are a couple of names that actually are, where the ROI is the main focus right now. One, obviously, Microsoft that's reporting. Those guys are basically, the demand is not bad on Azure side or AI Azure side. It's just that, they've got a lot of constraints in terms of the capacity side. So let's hope that as they accelerate and as some of the other names accelerate on the CapEx side, the demand will turn into revenue and therefore profits, whether it's on AI specific or overall cloud offerings. So that's just one example.
If I'm betting the AI CapEx boom continues, Ali, though, and maybe it's even going to be stronger than consensus estimates, do I stick with some of those chip plays too, Ali? Do I stick with an NVIDIA? Do I stick with a Micron, a Broadcom? What do you think?
Yeah, that's a good question. I should first indicate that we're not in any of those names anymore. We are actually in one that, in our opinion, holds a monopoly in this entire chip space, and it's the true picks and shovels of chips, and that's ASML. So that's our current holding. But in terms of demand, overall demand for GPUs, and then therefore potentially for additional demand for memory, which is the MU that you brought up, yes, that will continue to increase. However, as you know, NVIDIA is facing additional competition. One of them is obviously Google's TPUs and other ASICs. Amazon, we're hoping, is going to, they're going to actually discuss, their chip offerings a little bit more, and their additional investments on that side, generating some additional ROI. So NVIDIA is facing a lot more risks, or competition, I should say. And, the beneficiary of that competition is one of the other names that you mentioned, and that's Broadcom. Those guys are one of the main partners, one of the main makers of those ASICs, especially for, of course, Alphabet's TPUs or Google's TPUs.
Another big theme, Ali, heading into these reports is going to be cloud growth. I'm just curious, Amazon, Microsoft, Google broadly, what kind of cloud growth are you looking for, Ali? Year over year, is it flat? You think it's going to be stronger than expected? What do you forecast?
Well, I think for Amazon specifically, I think it's going to be a little bit stronger. Again, their issue the last few quarters haven't necessarily been demand. It's just been limited. It's just been basically capacity. And as they've accelerated investment on that front, and that opens up their computing capabilities and all of that. So the demand, whether it's driven by AI or just overall continuing cloud transition, is going to turn into additional revenue for those guys. So I think those guys, they're going to see some acceleration on the cloud side. But to answer your question more directly, I do see acceleration on the cloud side of revenue for all of them. But we just think that Amazon's is going to be a little bit faster. And after Amazon, probably see some cloud revenue acceleration on with Google, especially given the fact that Gemini has been doing so well since they came out with Gemini, the latest Gemini version. And we've seen that with all of the download stats and so forth. So that's going to help them too. And then Azure, obviously still the number 2 player on the cloud side, and hopefully their Copilot or agentic Copilot is going to help them a little bit. Although they are seeing additional competition, and they're actually currently, to a certain extent, utilizing what Anthropic is offering in addition to OpenAI's offerings. So, but I do think that we do think that Microsoft is probably also going to be accelerating their cloud revenue growth.
Ali, traditionally we would talk about that cloud market, those cloud kings, and we would talk about Amazon and Microsoft and Google. Larry Ellison has been muscling his way in as well. Do you like Oracle here, Ali?
Well, we don't have any position in Oracle. I think some of the things that you should look at Oracle is they are burning cash, and at the same time they're increasing their debt to make those data centers. Last time we checked, around $300 billion is needed for those guys. So we'll see if access to capital for those guys is going to be easy enough. And then on the other side, of course, one of their main clients, from whom the demand is coming, is OpenAI. And access to capital on that front is also, I wouldn't say in question, but uncertainty on that front is increasing a little bit. So those are some of the things that we'd be looking for.
Ali, I got to end here with Meta, because my friend Brent Till over at Jefferies, he recently told his clients, this is a name to own. Top pick, he said, Ali. Buy the pullback, Brent says. You agree with that call?
Well, again, I will say we're not in that name. However, I say technically the chart is looking better. That's number one. On the fundamental side, I do track the ad prices, and it looks like the ad prices during the last quarter in Q4 of 2025 have increased around 8.8%, basically around 9%. And that's where the consensus is. The consensus is around 8.5% to 9%. So it looks like on the ad prices, they'll be doing well. Also, guidance on the revenue side could be a little bit better. And this is, again, based on the stats that we track here. That's not only based on ad prices, but also ad inventory. Remember that the midterm elections are coming up, and these guys actually have said that there will be posting, or I should say they will be offering political ads. To a certain extent, they will be limited. They won't be offering political ads until, or I should say during the last week of the election, before the election. But from now until the election, I think that's going to boost their ad numbers a little bit. So that's to a certain extent, that's a seasonal type of benefit that they will have. But overall, again, just based on some of the stats that we track, it looks like the revenue is going to be better, and they could possibly provide some pretty good guidance, top line guidance.
Ali, always good to see you. Appreciate those previews.
Sure.
Thank you, sir.
Sure.